What a week. A collapse of what? 2,000 points? From 11,600 to below 9,600. And then a jump up of nearly 1,000. I mean, that's what, below 9,400. So it was nearly 10,400. So pretty volatile times. What I wanted to talk about today is an excellent resource that I just came across over the week. So, we looked at algorithmic trading last week, using the whatever technical indicator you want, and then checking, back testing to see, okay, if I buy when the RSI is at 20 and hold on till it hits 60, or whatever rule you come up with, you backtest by looking at the last couple of months maybe and seeing whether that rule tends to work. And of course, if you do it numerically, you can access the historical prices and check for the last whatever years and develop statistics about what the probability, how often does your method work, how much do you typically make, etc. But what about if we looked at how many people did, how many millions of people traded, to see what are they doing right, what are they doing wrong? I thought that would be interesting. And that's what I found. Same site, Daily FX, loads of resources, and they posted this. The link's there, and I'll put it in the description below the video. So, what is the number one mistake foreign exchange traders make? And he's talking about foreign exchange, but this holds across many things. But, whether you're talking about shares, whether you're talking about commodities, it's the classic mistake, problem, flaw in people's trading. And what is it? It's something we've been talking about. It's something I've mentioned. Zoom in ahead, and you can look at it yourself. I'm not going to paraphrase what he said, but essentially it's using stop losses and there. In general, a risk reward of 1-to-1 or higher. Okay, so I've been talking about using maybe 1-to-2, but you want at least 1-to-1. And if you do that, well, then the people who followed that discipline tended to do better. And these guys have access to 43 million traders or something. They have lots of data to base their conclusions on. Let's see whether I can immediately see it. Okay, the above. So for example here, that's a set of over 12 million trades, but essentially they look at they have lots of data to study, and it's handy to listen to what they have to say. Don't reinvent the wheel. It's all been done before. That makes sense. So not only do they have that, they have an entire mini course. So the traits of successful traders. So I'd recommend that you go through these. So that's what I wanted to talk about today. On Monday, there's another really nice page I came across last week, so we'll be looking at that, which is also something which is relevant and appropriate for quants. See you then.